Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about C&D International Investment Group Limited Annual Report. C&D International Investment Group Limited offers a diverse range of businesses and services. At the core of its operations are property development and real estate industry chain investment activities within China. The company also provides various support services, including entrusted construction management, which involves overseeing construction projects on behalf of clients. In addition to construction management, C&D International Investment Group Limited offers property management services, ensuring that properties are well maintained and efficiently operated. Furthermore, the company provides construction engineering management services, which involve planning, coordinating, and supervising construction projects from start to finish. These services collectively contribute to the company's comprehensive approach to real estate development and investment in China. By offering a range of specialized services, C&D International Investment Group Limited can provide end-to-end solutions for clients involved in property development and investment activities within the country. C&D International Investment Group Limited market capitalization of $27 billion is significantly larger than the average industry peer of roughly $4 billion. This shows that C&D International Investment Group Limited holds a significant advantage in their industry. C&D International Investment Group Limited trades at a lower price-to-earnings ratio of 7 times and a higher price-to-book ratio of 0.84 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it appears. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than C&D International Investment Group Limited itself. The leverage on the balance sheet appears elevated, with liabilities of 75% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 7.04%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. While the company is able to service its interest expenses from operating income, the presence of recurring special charges raises concerns about underlying earnings quality. Investors should monitor whether these charges reflect ongoing operational inefficiencies. The primary drivers of revenue growth or decline in the company's performance can be identified from the extracted summaries. On the one hand, the main drivers of revenue decline are largely attributed to a decrease in cumulative contracted sales and cash collected from property development. This is further exacerbated by weak market confidence, leading to decreased customer demand for housing. Additionally, the shift in consumer preferences towards quality homes has led to increased competition among real estate enterprises, resulting in a concentration of market resources towards leading companies. On the other hand, revenue growth can be attributed to an increase in revenue from property management and related services, as well as higher revenues generated from Hangzhou and Xiamen cities. The company's efforts to optimize existing projects through improved sales collection, production quality, and cost management have also contributed to revenue growth. Furthermore, expanding incremental projects through enhanced investment precision has helped drive revenue expansion. The net income of the company remained unchanged, indicating stability in its financial performance. However, there were notable changes in profit margins. The gross profit margin increased from 13.3% to 13.9%, suggesting an improvement in the company's pricing power or cost management. On the other hand, other net gain decreased by RMB 0.24 billion, which may be attributed to various factors, such as reduced interest income or increased expenses. Additionally, borrowing costs decreased by RMB 0.74 billion, indicating a reduction in debt servicing costs, which contributed positively to the profit margins. Overall, these changes suggest that the company's financial performance is becoming more efficient and cost-effective. The company's debt level has undergone significant changes in the recent period. On one hand, current and non-current liabilities have decreased, with a total reduction of RMB 68,724,018. This is also reflected in the overall decrease in total borrowings from RMB 3 billion to RMB 0.26 billion. However, interest expenses have shown mixed trends. While interest-bearing borrowings have increased by RMB 167,419, total borrowing costs have decreased by a substantial RMB 2,139,962, representing a 27% decrease from the previous year. Furthermore, specific interest charges on bank borrowings and loans from intermediate holding companies have also seen decreases of 6% and 36%, respectively. Overall, while there are some increases in certain areas, the company's debt level has decreased significantly, with total borrowing costs also showing a notable reduction. The company's dividend policy has been consistent over the past 2 years. For the year ended December 31, 2023, the final dividend paid out was $0.30 per share. This amount decreased to $0.20 per share for the year ended December 31, 2024. Looking ahead, the proposed final dividend for 2025 is set at $16,139,000. It appears that the company has prioritized paying dividends to its shareholders over buying back shares. While there is no clear indication of a share buyback program, it's worth noting that scrip dividends issued in lieu of cash dividends may be considered a form of share issuance rather than a buyback. This suggests that the company's primary focus remains on rewarding its investors through dividend payments. That concludes the financial summary for C&D International Investment Group Limited. Feel free to comment below, and I will be happy to answer them when possible.